Hello and welcome to today's webinar on 529 Day 2025. We'll be covering top trends in 529 plans, and today's webinar is sponsored by Ohio's 529 CollegeAdvantage. We are joined here today with Trisha Good, Executive Director of Ohio's 529 plan, CollegeAdvantage, and I am your host, but I'll also be presenting Paul Curley, CFA, Executive Director with the ISS Market Intelligence, where I oversee data, research, events, and thought leadership on 529s and ABLE. Today's agenda, pretty clear, but we'll be doing a lot of the reminders, tips, and best practices. We will also be talking about key themes, trends, and updates on the industry. A lot has happened in 2025, so we're happy to cover the topics here today, but also in the questions and answer section here and throughout. Just a quick note on some housekeeping. We do have a chat functionality in today's Zoom. There's also questions and answers for today's speakers. This session will be on demand and able to be accessed at a later date. We also have a post-webinar questions and answers section. So as you have questions, as you exit today's webinar, there will be some feedback components as well. For a quick introduction to this webinar series, the real goal for this webinar and our series of webinars is really to raise awareness, understanding, and prioritization of 529 plans. So thank you for being here and joining here today on 529 Day 2025. Quick note about save the date. This year's 529 conference is in the fall. It'll be in Orlando, and go to 529conference.com to learn more. And without further ado, I would like to introduce Trisha Good, Executive Director of Ohio's 529 plan, CollegeAdvantage. Take it away, Trisha.
Thanks so much, Paul. I appreciate it. And happy 529 Day. It's very exciting. So if you want to advance forward one slide, Paul. Today I'm going to tell you about a way anyone can save in advance for whatever comes after high school with incurring little to no education debt. As Paul said, I'm Trisha Good from the Ohio Tuition Trust Authority. I've been with the agency since 1996 in various roles in the Finance and Investment Department and was appointed Executive Director in 2023. My family has personally experienced the benefits of saving in Ohio's 529 plan for our two children. With the help of our extended family, they both graduated from their respective colleges debt-free. Now we're saving for grandkids. It's crazy. As the state of Ohio employees, we do not receive any special benefits for investing with Ohio's 529 plan, CollegeAdvantage. Next slide, please. We all know that education after high school is a smart financial decision. Did you know that student loan debt in the U.S. is over $1.7 trillion? Approximately 42.8 million borrowers have federal student loan debt. The average of all student loan debt, including private loans, this is just the average, is approaching $40,000. Repaying that for over a 10-year period would be nearly $350 a month. Those are some pretty scary numbers, especially for those young adults that are just starting out in their careers. They may have to defer life events such as purchasing a vehicle or buying their first home, or maybe even starting a family. Wouldn't it be great to learn about a way to potentially avoid some or all student loan debt for yourself or your loved ones? Next slide, please. So we're going to talk about 529 plans. The biggest thing you need to know is they're tax advantaged. 529 plans were created in the Internal Revenue Code under Section 529, hence the name, in 1996. Earnings grow tax-free when used for qualified expenses, and withdrawals or distributions are tax-free when used for qualified expenses. The program manager will issue 1099-Qs, the tax form for qualified tuition programs, for all withdrawals. The beneficiary will receive a 1099-Q for withdrawals sent directly to the beneficiary, withdrawals sent directly to the school, or rollovers to a Roth IRA. The account owner will receive the 1099-Q for withdrawals sent directly to the account owner, withdrawals rollover sent to another 529 plan outside of your own state, or a rollover to an ABLE plan. The onus for reporting any 529 distributions correctly, whether they're qualified or non-qualified, is on the account owner. If the account owner or beneficiary is audited, we hope not, but if they are by the IRS or their state, it's the responsibility of the account owner or the beneficiary to provide the proper documentation. Unqualified distributions do have a 10% penalty, and you will pay taxes on the earnings. Exceptions for the 10% penalty include scholarships, attendance at a U.S. military academy, or the death or disability of a beneficiary. You will still pay taxes on the earnings, but the 10% penalty is waived in those 4 examples. You should check with your state of residence to see if there are any additional state tax deductions or credits available. In Ohio, Ohio provides a state tax deduction for any contributor, parents, grandparents, aunts, uncles, family, friends, neighbors, that files a state of Ohio income tax return. They can deduct up to $4,000 per beneficiary per year with an unlimited carry forward. It's important to note in Ohio, this isn't a contribution cap, it's just a deduction ceiling. Next slide, please. So you might wonder who can use a 529 plan and when should you start? Really, anyone can open a 529 plan for as little as $25, at least in Ohio. Subsequent contributions can also be $25 or more. You can open it before birth and through retirement. The benefits starting earlier include a longer period of time to save and the effect of compounding has on your investment. You can even open an account while you're in college and still receive those tax benefits. Next slide, please. So I've talked a little bit about qualified expenses. Qualified expenses are defined by the federal government to be the following: tuition and fees, books, computers, and related equipment and services, room and board on campus if the beneficiary is enrolled at least half-time in their program. The equivalent cost for off-site housing is also allowable. You should check with your eligible educational institute to figure out what the cost of attendance is that's included in the federal financial aid purposes to figure out what would be qualified. Apprenticeship programs, account owners can take qualified withdrawals for the payment of fees, books, supplies, and equipment like required trade tools for a beneficiary's participation in a qualifying apprenticeship program. Up to $10,000, which is a lifetime limit per individual for student loan repayment for both the beneficiary or a sibling. Up to $10,000 per year for public, private, or religious elementary or secondary education school K through 12, tuition only right now. There's some special qualifying expenses for special needs beneficiary that's available. And next slide, please, Paul. Effective January 1, 2024, 529 rollovers to Roth IRAs are now permitted without incurring any taxes or penalty. Now, there are some specific rules, as you might imagine, that imposed by the federal government. It needs to be the same beneficiary in both the 529 plan and the Roth IRA. The 529 plan needs to have been opened for 15 years. 529 plan contributions need to be in the 529 account for at least 5 years before rolling to a Roth IRA. It needs to be a direct transfer, meaning trustee to trustee. Yearly Roth IRA contribution limits do apply, and there is a maximum lifetime limit of $35,000 to roll from a 529 plan to a Roth IRA. And I must say at this point, please consult your tax advisor for specific questions about a 529 plan rollover to a Roth IRA. That's my legal disclosure. Just some stats that I wanted to provide. Ohio Direct has processed about 2,300 rollovers from January of 24, totaling about 14.3 million. The numbers are a little bit smaller for our advisor program, and we've rolled over about 210 in our guaranteed program for about 1.1 million. And I think Paul has some numbers for the industry. Paul, do you want to interject those now?
For the national numbers, there were In 2024, 30,000 accounts, transferred roughly 196 million in assets. So, Ohio is definitely in line with the rest of the nation, and it's occurring. So, thank you, Trisha.
All right, thank you. You can advance a slide, please.
Sure.
So people might ask, where can you use your $529 and what's the flexibility? Again, it's defined by the federal government, but you can use your money at community colleges, traditional colleges and universities for undergraduate or graduate degrees, technical or trade schools, and as we've already talked about, certificate or apprenticeship programs. The one caveat with the apprenticeship program is it must be registered and certified with the Secretary of Labor's National Apprenticeship Act in order to use it for a 529 withdrawal. Next slide, please. So these 529 plans are really flexible. They have a wonderful grandparent appeal, as I can attest to. They can be transferred to a different member of the family. It can be from the beneficiary, their child or grandchildren, siblings or children, their children, parents or grandparents, aunts, uncles, first cousins, in-laws, or spouses of any of those people I just mentioned. That was a lot of people to mention. So basically, anyone related to the original beneficiary by blood, marriage, or adoption is kind of an easy way to understand it. You can always check with the 529 plan of your choice to get a definitive listing of who it can be transferred to. Next slide, please. So what are the effects of a 529 plan on financial aid? So if a parent owns the 529 plan, the funds are assessed at a maximum of 5.64%, which needs to be counted on the parental FAFSA form. If the student or beneficiary owns the account, up to 20% of the account needs to be counted on the FAFSA form. The good news is beginning this current academic year, we're just finishing up 24-25. If anybody else owns the account, it does not count on the FAFSA, and the income that the student received or the distribution the student received does not count as income in the year of receipt. So really, really great news for those students that are getting ready to enroll in college or are in college right now. Next slide, please. So the other thing about financial aid is you should check with your specific school or program to understand how your particular financial aid plan might affect your financial aid package. As we know, most of the aid comes in the form of loans, which must be paid back. Some of the aid comes in scholarships. Scholarships usually don't cover 100% of the total cost of attendance. And some of the aid comes in the form of grants, which obviously are free money. They don't need to be paid back. But the message here is that even if you get some of those other forms of aid, it's always important if you can to try to save in a 529 for those other expenses that are not covered with by those forms of aid that you're receiving. Please consult your tax advisor for specific tax planning advice, or check with your financial aid officer at your school to figure out how the specific aid that you're receiving will affect your 529 plan. Next slide, please. So we've talked a lot about 529 plans in general. Ohio offers two 529 plans, a direct plan and an advisor plan. You can see the compare and contrast information we have here on the slide in front of you. We don't have an enrollment fee in either of the plans. The account maintenance fee, there is not one for the direct plan. And if you are in the advisor plan, it is waived for Ohio residents. We talked about the amount to open a 529 plan in Ohio is $25 in either the direct plan or the advisor plan. The one caveat to that is if you're opening a 529 plan CD through Fifth Third Bank, the minimum requirement amount to open it is $500. Those Fifth Third accounts do carry the FDIC insurance backing down to the 529 account level. We offer 22 different diverse investment options, actually in both our direct and advisor plan. The direct plan is predominantly mutual funds provided by Vanguard and Dimensional Fund Advisors, as well as those savings and CD accounts that I talked about from Fifth Third. And in the advisor plan, they're predominantly mutual funds provided by BlackRock, either active or the iShares. We, like other states out there, we cannot provide financial advice to our participants. We can provide them tools that we have available on our websites to help them map out their own personal savings goals, but we're not licensed. We're not allowed to provide any legal or investment advice. In the advisor plan, obviously, you have to gain access through a financial advisor. You pay a little bit higher fee, but obviously they're going to give you the financial advice. And then a question that we receive somewhat often is, can a financial advisor access the account? Well, obviously in the advisor plan, the answer is yes. In our direct plan, yes, a financial advisor can access your account if we receive explicit written permission from the account owner. So next slide, please.
Yep.
So how do you interact with Ohio? You can go to our website, collegeadvantage.com. You can call our 1-800 number, 1-800-AFFORD-IT. We worked really hard to get that acronym for that line. Our call center is open in Columbus, Ohio, Monday through Friday, 8:30 a.m. till 6 p.m. And if you're in our direct plan, you can access your account through our mobile app. We launched the mobile app in conjunction with our partner, Ascensus. They do our record keeping for us. You can go to the Ready Save 529, select Ohio 529 as your 529 plan of choice. On that app, you can access your account, you can check balances, you can review your performance, you can see how your 529 account compares to other savers, and most importantly, you can make contributions. You can also utilize your app to provide your unique UGift code to family and friends to make additional contributions to your loved ones. Next slide, please. So Ohio has been offering a tax-advantaged educational savings plan since 1989, so a little over 35 years now. Both the federal government and the state of Ohio continue to enhance the 529 plan's tax advantage benefits over time. As of the most recent quarter end, March 31st, we are servicing over 680,000 active customers in one of our plans, and they have trusted Ohio's 529 plan with over $18.1 billion of their hard-earned money. Let us help you save in advance for whatever your loved one's educational expenses are in any 529 plan across the country. Back to you, Paul.
Well, thank you, Trisha, and much appreciated. It's spring. I guess we're going into baseball season, so that'll lead into my first question of the community initiatives that you have going on. We're not near hockey, but in terms of 2025, what type of community outreach, engagement, partnerships do you have going on across the state of Ohio? Thank you.
So today we're launching several sweepstakes in the Ohio markets. We are launching a sweepstakes with the Cleveland Guardians for a $10,000 grand prize winner in conjunction with Cleveland Guardians. We are launching a sweepstakes also for $10,000 with the Cincinnati Reds. And today at 11:59 p.m., we are closing a sweepstakes with the Cleveland Browns VIP training camp, and that award is for $5,000. We have a couple other summer sweepstakes that will be in market soon. Sweepstakes with the Toledo Mud Hens, home run reader sweepstakes that supports the Toledo Lucas County Library system summer reading program. And then later, probably in June, we will be launching a sweepstakes with FC Cincinnati, which is also $10,000. Paul, as you alluded to, we already finished up hockey season, at least at the pro level. I think the Toledo Walleye are still in the running for their cup. But we had a sweepstakes with them earlier this year that was also a $10,000 award. In addition to those, we have partnered with various metro libraries around the state for various awards throughout the summer with their summer reading programs.
Sounds good. Well, thank you. I know for me, whenever I have questions, I go to the plan disclosure statements. I also look at the IRS publication 970, a lot of great, clear information there. I also enjoy going to, like, reading your own newsletter. Can people go to the collegeadvantage.com to subscribe to the newsletter, or is there a way to go through there, or?
You can definitely go to collegeadvantage.com and subscribe to our newsletter there. Yep.
Good. Just so one last question as well. I mean, obviously in 2025, there's a lot of movement around for interest rates. We do have a question on in the chat as well pertaining to interest rates, and just want to get an update on Fifth Third if there's any updates in 2025, any changes, anything to announce related to that, or how do you answer the questions as they come in related to the Fifth Third Bank capabilities?
Yeah, that's a great question. We have some premier rates right now. Fifth Third is offering in conjunction not only with 529 Day, they celebrate Fifth Third Day, which was May 3rd. They are offering promotional rates on our 3 to 5 month CD at 4.25%, on our 6 to 9 month CD at 4%, and our 1 year CD at 3.5%. Those rates do expire on June 6th, but you could take advantage of them up until June 6th.
Sounds good. Well, it's timely topic, a lot of interest in that product, and it's great that your team offers those options there. And we had mentioned the differential and setting up an account for those with Fifth Third. So that's great. We do have a couple other questions coming in. Related to a couple other items, but I'll go through. Jump in, go through our section. We'll have questions and answers at the end as well. So we'll be bringing you back in shortly, Trisha. So thank you so much.
Thank you.
So new themes in terms of just education, financial planning. In many ways, like the new themes are back to the fundamentals that is just so valuable. The value of education and training just continues to increase as one just does get more education and training. It is leading to higher levels of income. Inversely, though, typically the higher levels of education and training are leading to lower levels of unemployment, which is great. Just shows the importance of the education overall. One thing that we've been really getting a lot of questions around is just automatic savings and automatic contributions. What it does boil down to is that by and large, people are automatically contributing $7 a day. So it's a very reasonable levels, and just shows that in many ways people continue to save to and through the market volatility, and then saving does pay dividends in the long run. About 39% of accounts do have automatic contributions set up, and from an asset allocation perspective, the most 529 plans are invested in the enrollment date tracks, which does de-risk over time as people approach the age of going to college, or however the assets are used. In terms of key developments, Trisha did touch upon like the bullet points and requirements related to transferring 529 to Roth IRAs, but by and large, the expansion of qualified expenses does reduce the mental hurdles in terms of opening up an account and fully funding the accounts. But by and large, the enhancements such as this is broadly speaking, supporting the positive money habits, saving for one's financial goals. Over time, the use of 529 plans, continues to expand, and one way to sort of think about that is how people are using the amounts contributed into 529 plans. Roughly 95% of the money going into 529 plans is being used for qualified expenses. So 529s are successfully helping families to save and pay for their qualified expenses. And as Trisha kind of talked about, there's been an expansion of qualified expenses, going from college to graduate school to apprenticeships to K through 12 tuition, transferring to Roth IRAs and student loan repayments. Historically, 529s have been used for college, but there's about 31% of people are using 529s for these newer categories. Pivoting from a moment from our survey of parents over to our survey of advisors, like when we ask advisors how they plan to use 529 plans, they too plan to use the assets for college, graduate school, K through 12 tuition, rolling over to IRAs. But by and large, 529s are being used in terms of broader and broader use case scenarios. When we look at the market data in terms of just like the national numbers in terms of how many people are saving with a 529 plan, we have seen an increase in number of accounts, roughly 3.8%, and over the course of 1 year. When we look at net flows in terms of just money in versus money out, that more and more people are saving. When we look at historical first quarter 2023, the first quarter 2024 to 2025, broadly speaking, more and more families are saving with 529s, and overall 529s continue to grow and broaden. There's 17.2 million accounts currently being saved in 529 plans. That compares to roughly 350 million families within the US currently. So 529s continue to grow. We can see in 2001 there was just over 1 million accounts, and now we're up to 17.2 million. So in terms of number of accounts, 529s continue to help families to save. We did field a survey this year of parents that are saving for education, and it's very intriguing to see how things have changed over time, that more and more families are saving for college, and more families are saving with 529 plans this year compared to last year. There was a 2.1% decrease in those just not saving this year. So inversely, more people are saving. We did field the survey from April 4th to April 17th. There was a lot going on broadly in that time frame. So it's great to see that families continue to save and pay for education. There's also an interesting component for 529 plans where one is able to roll over 529 plans or to able accounts. Able accounts are a dedicated savings vehicle for families, for a family, for those with a disability, with those of an age of onset by the age of 26, starting next year based on the Able Age Adjustment Act. The age of onset for disability in order to open an able account will increase from 26 years old to 46 years old. There's also a couple new provisions that are being looked into that would make the able accounts more permanent as opposed to sunsetting, which means ending. A couple components there. So, but by and large, able accounts continue to grow. There's 204,000 accounts being saved as of March 2025. There was almost 2.5 billion in assets being saved in those 204,000 accounts. And broadly speaking, we continue to see traction for able accounts, which helps families and those with a disability. So obviously, it's a household topic where perhaps there's 1 or 2 children using a 529 account and 1 or 2 that are using able account. So it's a great household product, and there's the ability to roll over where the scenario to occur, to roll over 529 assets over to able. So a great household vehicle as well. So we did mention that the Ohio's 529 plan, CollegeAdvantage, does have an e-newsletter. I believe the 529 Explorer is your blog site. Is that correct, Trisha?
Correct.
Right. So on CollegeAdvantage, you can go and look at 529 Explorer, and it has all these articles for that helps parents, employers, advisors, nonprofit organizations on how to use 529 accounts. Correct?
Absolutely.
Great. And for us, we do annual surveys of parents and advisors on how people save and pay for education. And we'll be releasing our report, one in June and one in December this year. So for questions and answers, I do see a couple coming in, and we can take a quick look in terms of what they cover. I do see a couple of questions related to the transfers of 529 to IRAs. Trisha, I'm not sure if you've been able to read through them yet, or I can pause and take a look myself, but do you want to address those, or?
Yeah, so somebody asked about the 529 account being open for at least 15 years. When the account owner of the plan changes, but the beneficiary remains the same, does the 15-year period start counting from the new owner's assignment or from when the account was originally opened? Ohio's position on that is we were really not able to provide a response to that. You really needed to consult your tax advisor for the interpretation of the tax law. The guidance that I provided in my slide is really the guidance that the industry has gotten from the IRS to disclose what the Roth IRA transfers are. Paul, anything
Yes.
else on that one?
Yeah, I mean, I think we have the six bullet points, that we all kind of take a look at. I do think more interpretation is needed related to that, the definitions of changes of accounts and but I think we are all clamoring to get more clarity in terms of what about this scenario, what about that scenario. But in the meantime, I think you're right. It's best to be cautious, but in the meantime, definitely talk to your accountant and hopefully they can provide a little bit of guidance for your specific scenario.
Yep. And then somebody else asked if a 529 plan could be used for beauty school. I would check with your institute that you're wanting to attend to see if they accept $529 at this point.
Yep. I see that question as well, and thank you for answering that one, Trisha. And for the more information on able accounts, there's a couple different sources. The two sources that I typically point to is the IRS disclosures and publications, because they do provide the federal sort of like context for able accounts, and then for the individual plan disclosures, they do provide information about more plan specific information. There's also a couple different websites. Such as the National Disability Institute that does provide a great website, related to able accounts. And there's a couple other, great more, stakeholder, groups such as National Down Syndrome Society or Autism Speaks, and a couple other, groups that provides great information on the able accounts as well. So hopefully that helps. And for Trisha, I see the question about what is the 30-year rule? Is that perhaps related more to Coverdell accounts, or I'm not actually
Yeah.
not
I'm not
familiar with.
sure what that question is related to.
Right. I think in terms of like the question coming in about what is the 30-year rule, from my context, I'm not aware of 529 plans having a certain time frame perspective. I do know Carbardells have a number of you know um, just sort of requirements, and such as that the account needs to be opened by a certain time, needs to be drawn down by a certain time. So just looking, I would just suggest take a quick look at the 529 plan specific website, just to look at their information, and of course call Trisha and her team if you have questions specific to your situation. And I think that what is the benefit in saving in a 529 rather than parking those savings in a 529 S&P 500? Trisha, I would probably point over to the tax slide. That from my perspective, I believe it's roughly 32 states provide a state tax deduction or credit on the money in. It grows tax deferred, and when you take the money out for a qualified expense, that the gains, you don't pay federal or state tax on that gain portion when used for a qualified expense. That's typically when it of course there's financial aid and estate planning benefits of 529 plans versus S&P 500, for example. But Trisha, did I summarize it right, or what did I miss?
That was a perfect response. It's really all about the tax benefits, both at the federal level and the state level.
Perfect. Yep. And I mean, I would also, from my own, personal experience, just the value of having a dedicated account for a dedicated goal. There are some people, um, for example, that use retirement products to save for college and vice versa. So it's really just like in your mind having a dedicated account, such as a 529 account, to save and pay for qualified expenses. That does help out a number of families as well. Um, and for taking a quick look at the other questions that have come in, um, I think it could be interesting to cover how Ohio's 529 plan covers just the distribution side um, of the equation. There's like the like how do we submit for reimbursement for expenses? Just because there's a little bit more focus from an industry in terms of the different functionality on the taking money out perspective. I don't know if you have a common answer for taking the money outside of the equation.
Yeah, so I can speak from personal experience, given that we use the 529 to pay for our kids' college. It's really easy to spend that money. Once you set up, however you want to make your withdrawal, whether it's to a school or whether it's to yourself, once you set that up, the initial setup takes I'm going to say about 5 minutes. After that, you can go in. The system that we use is saves all of your previous information. It takes about 30 seconds to load in how much you want for the next semester to go, whether it goes to the school or whether it's a reimbursement back to the parent or the beneficiary. It's really easy to spend the money.
Thank you, Trisha. Much appreciated. There's a question that broadly speaks about changing of investment options, just in terms of just capabilities, functionality. I think this one is a little bit more focused on, perhaps if someone, shifts the money from a fifth third account over to another investment option. I guess I'll see if you have any um, traditional response for that question in terms of like money in and out of the fifth third account.
Yeah, I mean, broadly speaking, you can make two exchanges per year. If you want to take money out of a fifth third from a savings account to an investment account, you can contact our 1-800 Afford It number and they can help you through it. It's pretty simple. You can go to one of our forms online and request the change there.
So Trish, I do like this question coming in from Patty. There's is it ever too late to open an account? And I guess inversely as well, is it ever too early to open an account? And I'll see how you handle that one, Trisha. Thank you.
Yeah, so from our perspective, the earlier the better. But given that it's never too late to open an account because you're still going to get the tax benefits. Depending on what state you're in, you may be able to take a deduction or a credit for any contributions that you make. Anything that you're able to save is better than nothing, even if you're waiting until your child is in high school. You may be able to save a little or half or all of it. Any bit that you save is going to help you avoid student loan debt going forward.
Great response. Based on our market data, about a third of accounts are opened, before the age of 5, before, they start, and kindergarten going to there. About a fifth takes place like during the grade school, and about a fifth in high school. So there's definitely a lot of the late stage planners, and you're absolutely right. It's never too late to save, and even thinking about grad school as well. I wish I kept saving like through undergrad and before when I graduated, and then of course going into grad school. So it would have been nice to keep it keep the savings going. And of course there's the new capability and functionality about using 529 assets to repay student loans. So I think that's an interesting element as well. Um, so anyways, I think that I'll ask a question about just the use case scenarios for, using 529 assets to repay student loans, that's an interesting element as well. I guess with maybe the student loan pause and restart that perhaps someone's been, using, say, like you promised to save up money, and then all of a sudden they can, use that to repay the loans. But is that a common question you get, Trisha, or?
I don't think it's too common. We don't really see a lot of that because if they're paying their student loan, I think the money goes directly to either the account owner or the beneficiary. So we're not really able to track how they're using that money. But I know that there probably are people that are doing that, but that's not a data point that we track.
Great, great point. I mean, it is good from a storyboard perspective to keep saving to and through, when people go to, college, and then even you continue to, pivot that money you've been, saving for college to paying, and then repaying it as well. Could be some good opportunities there. So we have about 3 minutes left. There's a number of questions still coming through. Um, there's something that I'm curious about that Greg had touched upon was what are the benefits between disbursement to the school or person? I guess we can even broaden out the question, like for taking the money out, like what options do you allow, and what's the I guess pros and cons maybe for one way or the other, or?
Yeah, so we allow disbursements to go to the account owner, the beneficiary, or the school, or you can send it directly from our office to a trustee of a Roth IRA. I think it just depends. It's a personal family choice on how they want to disperse their monies. For us personally, our family, it was just easiest for us to send the money directly to the school from the 529 plan. That way, I didn't have to float a loan or advance the money and then wait for the reimbursement to come back to me as the owner of the 529 account. I think that's a really nice benefit. There are other people that may want to pay in advance for any number of reasons and then collect or keep their receipts in case of that dreaded audit that might happen. I think it's important to note that if you're reimbursing yourself, I believe that the reimbursement needs to happen in the same year you incurred the expense. I believe that is an IRS regulation that if you paid for student expenses in 2024, you need to do the reimbursement in 2024 as well. So you have to match that up. But I don't know that there's necessarily a benefit to either one. It's just a personal preference.
Sounds good. And thank you, Mr. Job, for your insight on the 30-year rule. With 2 minutes left, I guess I'll close with the final question, and then then we can any questions we didn't get to, we can follow up after. But for me, what are you most excited about, Trisha, looking out at 2025 and outlook for 529s? I know for me, my quick response would be the expansion of qualified expenses just makes 529 so much easier to use. That these different like use case scenarios is broadening the demographics of users, and we touched upon that the mobile app and way, broadly speaking, the ease of use is improving for able, perhaps going from paperwork to mobile to digital. But those are the three things that I'm excited about for 529s in 2025 in the next 3 years. But Trisha, how about you for a final positive upbeat note as we close out today's webinar pretty soon?
I think the message I'd like to get across today is that, it's important to save. It's important to save in a tax advantage manner if you can. And honestly, while Ohio would love to have your money, just save in any 529 plan out there. Just save and please help yourself or your loved ones avoid that student loan debt. As much as you can save in advance, whether it's you're finding money in unexpected or expected raises, or found money, you get a tax refund or anything like that, just save in a tax advantage manner. We too are really excited about the possibility of disbursements going through a mobile app, maybe to make it a little bit easier for those students or people that have their computer on their hip or in their purse or in their pocket at all times, and being able to utilize their cell phone to transact more with 529 plans.
Sounds good. Save efficiently. Had the education financial planning conversation today. If you need more information, talk to Ohio's 529 Plan, College Advantage. Have the conversation. Thank you so much for your time and cheers to creating a great day. Thank you.